probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Hey, Mike, this is Dennis. We are back for, normally we don't do a fifth Monday. We let it rest, but the information we have is so important today to get out so people will have the all 10 secrets for, trading secrets to start the new year. So we wanted to get this out to everybody. Isn't that right?
Yeah, absolutely. It's been a choppy environment for the last couple of weeks, and the stuff that we're talking about here, I think, is really going to help a lot of people. So, best to not delay. Let's get it out.
I agree wholeheartedly. And so, hey guys, do you know that the one thing that might be holding you back from trading success in going into 2025 is not the markets per se, but what we believe about the markets. I'm just finishing up a really good study that has to do with false and limiting beliefs and how they hold us back from achieving our best. And I'm working on putting together a really good, training session that's basically going to take the false and limiting beliefs that we have as traders and convert that into, okay, how can we fix that? How can we fix our self-talk? How can we turn it from negative to positive? But today, this is the Trading Truth podcast, and today we're going to close out 2024 and handle the remaining portion of the 10 expanded 10 essential trading secrets to kickstart 2025. And just to give you a really quick, before I turn it over to Mike, to give us a really quick review. What were the first four? Well, number one was learn the basics. Number two was identify your trading style. 3 was set clear goals. And the fourth was learn a proven strategy, because there's a lot of proven strategies out there. Mike and I have 2 of what I think is the best strategies that is out there for swing trading. And so I'm Dennis Wilborn, author of Trade Your Way to Freedom and the creator of the Autopilot Trading. And I'm introducing Mike, Mike, go ahead and just introduce yourself. There's some nice words there for you.
Thanks, Dennis. Yeah. Hi, everybody. I'm Mike Lamott. I've been trading for about 25 years. The first 10 were a nightmare. After 10 years, I finally figured out what to do and how to do it. And it wasn't by myself. It was learning from the work of William O'Neill, Mark Minervini, maybe a few others that you've heard of, Van Tharp, Nick Darvis. And it was not just studying from books, but learning from other people in a group. And I think that the group dynamic really helps, and it transforms it from something that will be like a hobby, something that you're doing on your own, to something that's really something that you're going to make money with and make a living with.
Right on.
That you could do in a pack. Right?
Mike, you mentioned something there. You mentioned something there about, you were learning from the book, you're learning from books, but then you interacted with other people and all that kind of stuff. Is I know what I find a lot of times with folks who say they want to start trading and all that kind of stuff, they may grab a book, but then they don't have an implementation plan for implementing what they're learning from the book. And so so they don't convert knowledge to wisdom because there's no application.
Right.
You find that similar? Go ahead.
Well, I don't think that I don't mean to say that it can't be done, right? Because there's always going to be the outlier of somebody that can go and read something and go on their own and do it. But I think that really is the exception to the rule. I think that the vast majority of people will do a lot better learning from books than going to other people that are studying the same thing, bouncing ideas off of one another, and then being able to make a lot more progress that way. It's time tested. It it's what works.
Right on. Yeah, it's it's a plan for the application. How are you going to get that applied to what you're doing, and without being overly. And also, what I'm going to say is, if you were going to give some advice to somebody, or some words of encouragement with regarding the expectations. So let's say somebody's going to say, "Yeah, it's the beginning of the new year. What's going to happen?" There's going to be a lot of people saying, "Oh, I'm going to start trading this year, and I'm going to, blah blah blah, and I'm going to jump right in and do really well, and I'm going to make $1 million my first year on the $1,000 I had to invest." And what would you say? Well, you've heard this story before. No, what would you
If they
say
figure it
is
out, I'd like them to share the secret, because I'd love to be able to know how to take $1,000 and turn it into 1 million inside of a year.
what happens every year? But no, I'm just kidding, guys. Guys, I'm not. I'm just joking on that. But how would you help somebody who's new establish their expectations of what to expect in learning how to trade?
Oh, I'd start off by handing them 2 books, namely yours and mine, right? Because the reason why, though, we even wrote these books in the first place, right? Oh, there they are.
There's one. Whoops, we're gonna get.
Yep.
Oh, don't want to get that too shiny. And there's Mike's. But yeah, these are
So
great
if you're
books. And
starting from scratch, this is important to know what you're getting yourself into.
yeah, right on.
I didn't know what I was getting myself into when I started trading, and that's why when I thought back to, gee, well, what would I have liked to have known? Well, knowing the types of things that I would need to know about would be very helpful. And I got some of it from O'Neill, some of it from Mark, some of it from Van Tharp, and I ended up building this thing. Some of it from Mark Douglas too, the psychology parts.
Right
But you
on.
really need all of it.
Yeah.
And you don't really know what you need until you're in it. So that's the purpose of the mind wheel, and it tells it like a story, and it shares, well, here's why you need to learn these things and the mindsets that are needed for them.
Okay. So yeah,
It,
you made a comment. You don't know what you need, and you don't know what you need until you need it. Um, the At the same time, I think that traders can be prepared. Like anytime you need to, you're going to plant a garden, you're going to prepare the soil, right, and all that type of thing.
right, right, right,
So part of their preparation, I think, before they, because anybody can go down and open a brokerage account and get started trading and start, just guessing at what they're doing. Whereas if you would take, because I know Mike's book, my book, you could probably read both of them in a day. Take a half a day to read one, half day to read the other. What it's going to provide to you is provide people is a at least the preliminary foundation, so that you will be all of a sudden smart enough to start knowing what questions to ask about what comes next.
right.
You know, and so yeah, and I think that's one of the other things that's so important about these truths that we're going to be, are the essential trading secrets that we've been following, is all 10 of these. We didn't just go poof and pull them out of the air, right? These have been things that have impacted me when I was trading, and impacted Mike as he was trading, and they're basically the result of myths that are in the market. Uh, One of the things, it's really funny, is I'm always about how do I get better, and so
Mhm.
part of how I get better is I stop occasionally and just write down, you know, you know, how are my beliefs either propelling me towards my objectives and goals, or how are my current beliefs repelling me from my objective goals? In other words, there's stumbling blocks getting in the way. And
No,
and that's
interesting.
and so that's absolutely critical, and it's knowing the essential, trading secrets that we talk about and how to deal with them. That really, I think, helps. At least it has helped me. And so, what
Oh,
about yourself, Mike?
well, I was gonna say, can I put you on the spot?
Go ahead.
And yeah, would you mind sharing one of them that was getting in the way? Well, one of those limiting beliefs, and uh, what you've done to maybe uh, change it or uh, get a new belief, and if you did get a new belief, or what that new belief might be.
Yeah, I think one of the ones that I started off with um, was, it had to do with risk management w- in a way. What it had to do
In a
with
way.
is I, because of past successes in my life,
Okay.
where I had done really well on a lot of different, different areas, all the way from, my education, flying for the Navy, doing all that kind of stuff. Those are really cool, great, achievements.
Okay.
I thought that those achievements, because I had done that, that was immediately transferable over to trading. In other words,
How so?
trading's got to be simple, right? And because I've done all
Oh
this
yeah,
really
because if
hard
you're able to
stuff.
land a jet on a moving ship, well, how hard could it possibly be to click a mouse, right?
Exactly, and that was basically it. And so I was too proud in my and in my opinion of myself and my abilities was higher than it deserved to be when it was translated to trading.
Mhm.
Because I was basically saying, who needs the stinking stop losses? And I'm smarter than the market because I've proved it.
Mm,
Anyways, so when one walks in with that type of a belief, or when I walked in with that type of belief, I was an accident waiting for a place to happen. And and what was the pain points for me? Well, pain points for me were blowing up 2 accounts. And so when
mm,
you blow up 2 six-figure accounts, that hurts. And it leaves an impression not only on myself, but also an impression, a big impression on the lady I've been married to for over 50 years.
yeah.
She was not a happy camper.
How I don't know if I ever asked you this question, but how do you come back from that? Well, like, oh, what did you do? Did you just save back up again? Did you trade your way back up, or how did you make all that back?
Yes, to all of that, both saving, started saving again, started basically trading again, and but started trading from a completely different perspective. Because what was really wild, at least I think it's wild, is that for my for when I was doing that thing of losing because I would not use the stop losses, I had my system. I'd already developed my
Mm,
system, or what was
mhm,
the bones of my system,
right.
and my system was telling me, if you'll do A, B, and C, the results are going to be a lot better. But I
Mhm,
was just the proverbial, the trade would start to go against me, and I would sit there and watch it, not having a stop loss. Or, I'd use the lie. Well, I'll put an alert in, and then I will act on the alert. And that is one of the hardest things in the world to do from my perspective. And, because I kind of sense that if people will, um, if they think that they're going to do that and act on it, if they can do that, more power to them. But I've known more traders that say they were going to do that, but are unable to do that. But and so that's part of it. Is basically I actually stopped trading for a while,
mhm,
rebuilt and did the back testing on my system to know exactly how it functioned, how it worked, what it looked like, what were the trade setups that I need to be taken, what were the patterns that I was looking for, hone those down to a very manageable number like 3. That's all I'm looking
mm,
for today. And then started applying the rules of, hey, take your stop losses because that gives you that's your insurance policy. That's the biggie. And then at the other hand, don't over anticipate your trade entries. Wait for your
Mm.
setup. And I basically phrase that now as just, you know, um, be patient, be prepared. It's kind of a takeoff from the Boy Scout, motto of be prepared. So, but what about you? We're talking about 2024, and we're going to get into the numbers here shortly, guys. And we want to encourage you to hang with us because I am going to show you one indicator prior to closing down today that you can utilize to with an uncanny ability to basically demonstrate where to can lead to some really nice profitable trades, but also tradable trades. So, what about you, Mike? What's your, kind of like some of your major points you've learned in trading for 2024 that you'll take into
Uh,
2025?
Multi-time frame analysis is a big one, and it's in using all the time frames. I like to use 4 time frames on my chart. So I always have 4 time frames up on the charts that I'm trading. I like to have monthly, weekly, daily, and a 30-minute. And sometimes I'll even change the intraday chart, the 30-minute one, down to a 5-minute chart. And
Okay.
I'm not using it to day trade or scalp or anything like that. What I'm doing is to fine tune my swing trading. The intent is always for swing trading, but by using those intraday charts, I'm able to really nail where I'm going to enter, where to place my stop loss. Are there fractal patterns developing
Right on.
within the larger time frame? And to be able to spot those, it helps me to either get in early or actually exit a little bit faster before price moves against me. That was something that helped me stay out of Dodge over the weekend. Coming
Mm,
into today, I took a couple of test positions on Friday. No, was it Thursday? On Thursday or Friday,
right.
I bought uh, Reddit and I bought Dutch Bros. Both of them were beginning to break out of what I saw as advanced areas within a base.
Right.
So I took those. By Friday, they were both starting to reverse. And so I exited them early because they were breaking those intraday levels of support that I thought that they should either hold at the very least or at best start to bounce from. That didn't happen. It started to get a little bit wider and looser. And when I see that kind of wide and loose action, it's telling me that the sellers are in control. So I
Yeah.
decided to get rid of those. And every time that I've seen, whenever I've been able to keep my losses even smaller, it's allowed my winners to be able to do more work lifting the equity curve higher versus digging myself out of a hole. So
Right
I'd
on.
much rather take the much smaller paper cuts than having to dig out of a deeper hole.
Yeah. What's really amazing about that multi-time frame analysis that I've found, because I do something very similar, but what I find is people would be really surprised uh, with the number of hidden levels of support and resistance that they'll find on the monthly chart and also on those intraday charts. I mean, the intraday charts, again, I don't trade it, I don't use them for day trading or anything like that, but they are exceptionally great at revealing, hidden levels of support that you're not going to see on the daily or the weekly. And,
Right,
and
right.
so it's phenomenal. So, but anyway, okay, great discussion. Hey, if you have any questions for Mike and I, don't be a ghost out there. Just leave a note down in the chat box, or just tell us how much you appreciate what Mike and I do here on the Trading Podcast, on the Trading Truth Podcast. So, hey, our first of our remaining essential trading secrets is a really big one. It has to do with risk management. And the myth goes something like this: high risk equals high reward. The major pain point in this is, of course, significant losses, emotional stress from poor risk management. So, Mike, how do you talk somebody off the cliff here?
Well, they think that if you go all in with your account, then that means that your whole account needs to be at risk, right? So if I'm putting
Mhm.
in, say, 10 grand, then I'm willing to let that whole 10 grand go to zero. No, right? I
You're
hear the
not?
dog barking in the background. He objects to that too.
Okay.
But no, so let's say that you've got 10 grand, you put it into a trade. I generally like to risk 1% on average, often less. So let's
Okay.
just use 1% because that's an easy number. If I'm putting 10 grand into a trade, then that means that I'm only risking what? $100.
Right, right. Yeah. Mike?
Hello?
Yeah, can you hear me?
Yeah, I can hear you.
Okay.
Maybe we lost the connection for a second.
Okay. No, no, exactly right. I mean, and so, 1 to 2%, that's kind of the standard. And it also helps then tell you how many positions you can actually be in if you apply
Right.
that across. And there's some magic to that because typically if you're going 1 to 2%, that means that the max positions you can actually be in and carry that risk profile is somewhere between 5 and 10. And can you hear me?
Yeah, I can hear you loud and
Okay.
clear. Well,
Okay,
I'm not
sorry about
sure
that.
what's going on with the connection, but it looks okay on my side.
Okay. And so basically, um, like I said, and then so that starts to establish the parameters of your trading system and trading plan. Where if
Mhm,
the max I can be invested in is somewhere between 5 and 10, then if I'm starting to get, 11, 12, 13, 14 positions open, I better be looking for how can I cut this back down? And
mhm,
and it's a from what find, it's it's self not self-satisfaction, but a self-survival. Because what I've also found is that the more positions you have open, the harder it is to keep them to manage them properly. So,
right, exactly.
that
Yeah, I
might
would
this
much rather have larger positions in fewer names than to have smaller positions in a lot of names,
yeah,
for
right
the
on.
exact reason that you just said.
Yeah, I agree with that wholeheartedly. And so what I encourage you to do, folks to do is just, use stop loss orders to make sure that you're managing your account. And that's one thing I did over the weekend is I basically went in and looked at some of my positions and it looked like the market was going to be a little bit weaker. I tightened my stops up on several of my positions so that I could either get out profitably for a small profit or get out for a very small loss. And why
Mhm,
did I do that? I did that because I found myself in like 13 or 14 positions and I needed to prune the vine. And so
mhm,
I pruned it back down and sure enough, all those were hit this morning. And so I'm back down to eight entities that I'm currently in, and
mhm,
so that works really good. So what about choosing the right platform? Uh, all trading, with the concept of all trading platforms are the same.
mhm. So,
So yeah, go ahead.
are we talking about brokers? Are we talking
Well,
about
I think we're
starting
talking.
platforms, or what
I think
constitutes a
we're talking
platform?
about the trading platforms that are offered by the brokers, because all the majority of trading platforms are offered by brokers, right? I mean, there's a
And
few
so,
out there.
like Thinkorswim
Yeah, like
and their charts.
Thinkorswim, Fidelity,
Okay.
uh, even TD Ameritrade's non-Thinkorswim platform, IBKR. So they and so that thought of all trading platforms are the same, are they? Uh, And I'll give you an example. Initially trading, I was trading uh, Fidelity's Active Trader Pro, uh, their platform, and I found it very frustrating because it was not designed for a trader. It was designed for the old buy and hold mentality. And
Right.
so I traded that platform because right back then it was one of the only ones that was available. And I traded for 20 years until I finally said, this, no bueno. And I
Mm.
basically then jumped over into Thinkorswim, which was designed for traders by traders, and found
Right.
it
Right.
much more. I could do more with it. I could be imaginative in how I built my positions, how I built my trades, how I built my orders, um, and that type of thing. And so I think when I was trading Fidelity, I was missing a lot of opportunities, and I was frustrated because I would send them emails and say, "Hey, I'm a trader, and you guys suck." No, that isn't what I tell them. I would just say, could you happen to do just this? And one of the biggies I had was on their stop limit orders. They had their stop limit orders where your stop and your limit was the same number, and I wanted a cushion there, right? I
Yeah, well,
wanted a
that's the point of it.
Exactly, and they wouldn't modify it. They wouldn't change, their programming to allow for that kind of trading. And so, yeah, what do you think? So that's what I'm talking about in this.
Ah, okay. So I would say that order execution is the most important thing, and how you're able to set up your order is a big part of that. So,
Right.
to your point, now one of the things that, and Alberto, I see your comment there, and I kind of agree with you that since Tass and Schwab have gotten together, they're still working out plenty of kinks, and it's been several months. But it's still better than what I recall coming from. And I at one point I had E Trade. Before that, I had this thing called Options House. I don't know if you remember them, but
Okay. No.
it was an options platform. But of course, you could trade whatever you want. At the time, I was looking for cheap transaction fees, and I was looking for decent order execution, and it had those things.
Okay. Okay.
Eventually, I migrated over to Thinkorswim, that at the time was owned by TD Ameritrade, and it was great because it very low transaction fees. Eventually, it became free, and then how you could construct your order, the buy stop limits, and those kind of things, and it was very simple. The the orders would get executed at good prices,
Yeah.
and that's all I would want it for. All the
Yeah.
charting, all the journaling, all that other stuff I do outside of the broker, and I still do it that way because I
Yeah.
don't want to see the P&L flashing in my face and red and green and all that. I feel like I'm in a casino. I'm not there to be the casino player. I'm there to operate as the casino. So I turn all that
Exactly.
stuff off until I'm ready to place a trade. And then
Gotcha.
after I'm done placing the trade, it goes right back off.
So yeah, no, I agree. In Alberto, there says Schwab, Thinkorswim and Schwab going backwards since the integration. And I'm gonna call them out about that also. That because we've had with autopilot traders, I have designed my system basically around the ability to do the auto, the one cancel other orders. We call it our fire and forget, where you can basically trade buy and then have it immediately trigger the orders to get out of the trade.
Mhm.
Very convenient and very time saving. However, there have been some glitches in that, the Thinkorswim platform since it integrated, and I get sick and tired. I'm calling out Schwab right now. I'm sick and tired of hearing them say, "Well, our tech guys are working on it." When it was with TD Ameritrade, and even before that, when Well, Tom, what's his name, was the guy who developed it originally.
Sosnoff, is it?
Sosnoff developed the Thinkorswim platform. Back when it was with TD Ameritrade and before that, Invest Tools, the techs would get to work on a problem and they'd solve it typically within just a day, and everything was constantly getting improved. And so what I'm finding from Schwab is that they're just trying to maintain the status quo, not making any improvements, and certainly not fixing the glitches that are in the system right now. Now, with that rant being over,
Hmm.
I also think that it is still the best system that's out there for doing the kind of trading that I like to do. But I just wish they'd smooth it out a little bit.
Hmm.
Okay, I'm going to take a breath. And so, hey
All right.
guys,
So
if
the
you like this kind
platforms
of
do
podcast,
matter, is what you're
what's
saying.
that?
The
What?
platform does matter.
It does matter. And so, I mean, it's uh and so anyway, hey guys, if you like what we talk about with the podcast, the Trading Truth podcast, make sure you share it with another trader, uh, and check out some of our past episodes. They're really great with our guests and all that kind of stuff. Those are available on Spotify. Mike's got them up on his YouTube channel. I've got it on my YouTube channel, and we also broadcast live to X, um, not to Instagram, but X, Facebook, and LinkedIn.
Hmm.
Anything else? Oh, YouTube also is what we
Oh yeah,
broadcast
all over the
to.
place.
We're all over the place. Anyway, so here is another thing that people just tell me all the time. Well, I don't want to trade. I don't want to do paper money. Do paper accounts. They don't want to practice, and uh, so they basically they resist that, even though almost all great athletes have a very extensive practice regimen that gets them ready mentally and physically to do their thing on the field of competition. But the old myth is, you can skip practice and dive right in. So
Yeah,
I know
sure.
that was hurt me because that's what I used to think. And now I almost think a person should paper trade for a year before they actually risk their real hard earned money. The
Yeah,
market's going to be there.
that's probably a very good idea, and it's one that I wish that I would have heard of and took. But yeah, uh, it's advice that I give, but it's advice that I never took myself, and I wish that I had, because it's very similar to like, say, if you wanted to go into boxing, right? Like, so rather
Right.
than going and punching a bag, oh, let me just go into the ring and start sparring, but you've never put on gloves before. Right?
Yeah.
So, well, what do you think's going to happen? You're going to get beat the hell up. And that's the same thing that happens in the market. People get beat up. And, well, if
You know,
you like to
yeah,
learn the hard way, then.
yeah. I mean, reality will, like what I think Mike Tyson's used to say that everybody's got a plan before they go into the ring to start boxing, but then you get hit in the mouth, and it just the plan goes out the door. But the fact of it is that the practice. Is it going to be this? Because the thing I hear from traders a lot, Mike, is they'll say, "Well, it doesn't stimulate my emotions like trading with real money."
Well, how do you
Because
know that?
well,
How do you
but
know that
that
if you haven't tried?
well, but yeah, that doesn't that come back to the false and limiting beliefs a person has? I mean, I think it is, but again, I think I think a year is good, but you know, worst case is practice trade for at least 90 days. 90 days to learn the system, and that's one of the things I coach people with, and we have what is called the flight path to profits training, which is a 90-day training process, so that people at the end of that, they will have completed 400 practice trades. And there's something, I won't say magical about that, but Mark Douglas and his wife recommend doing 400 trades, simulated trades, uh,
Hmm.
and real trades, to basically know your system. You need that amount to know your system. And so doing the demo trades, there's a lot of different. Do you do demo trades, Mike? On like I said, do you still practice doing your trades? Do you do either paper trades or go back and do some demo trades on TradingView or are using
Well,
Thinkorswim's on
now I
demand?
will. So if I have a new idea that I want to test out,
Right.
uh, a new tactic, I'll go and I'll see. Well, how would my trading have changed if I did X, Y, or Z? And I'll go
Sure.
back to a chart that I had already traded, and I'll go and use the change date feature to go through it day by day by day, and say, oh,
Sure.
you know what? If I would have gotten in down here, here's what would have happened.
Right.
Or if I would have sized differently, and I'll make a spreadsheet to say, well, what happens if I would have sized differently in these kinds of scenarios? And then I have the results that way. That's a
Right.
lot better, and you get quicker results than putting money to work and hoping for the best.
Yeah. Because the other thing like you said, putting money to work. One of the things I like about well, both the paper trading account and also the on demand system from Thinkorswim, and I'm just learning now how to use the Trading View process for doing back testing or going back and just running through my system because I'm looking for three different patterns, right? And so I can see a whole bunch, I can see a whole lot of my patterns that I'm specifically looking for by going back and back testing or going back and then scrolling through, like you said, one day at a time, or if I'm trading a weekly chart, 1 week at a time. And you'll be amazed at it hones in and puts it into your memory. It does all the great stuff for your head, making those new grooves in your brain to that basically causes you to just that become a habit uh,
Mm,
for you. And the other thing that I like about using the on demand feature or even the paper trading account is at the end of the day, or at the end of the week or at the end of the year, uh, it's really simple to fix. You hit the button and all the money you've
mm,
either made or you've lost goes away. And all of a sudden,
mm.
so it's, it's not like that with a real money account. What you've lost is what you've lost. And so interesting. I like it. Okay, let's see what else we got going on here. Focus on emotional discipline. What the heck is emotional discipline? What's that mean?
Successful traders never lose or stress. Apparently,
Hey,
that's the myth.
okay.
So, well, what do you think about that? That successful traders never lose or stress. You're a successful trader. Do you never lose? Are you never stressed out?
Um, I do. Okay, it's kind of funny. Is in learning how to trade again, like I said earlier, I was one who would never use stop losses and all that kind of stuff, and so I would both lose and be stressed, right?
Mm,
However, since I basically reconstructed and built a really great system that's built on, and I've also come to understand that there's going to be a certain percentage of losing in this game or in this occupation that now I do lose, but I'm never stressed because I've changed my routine big time. I don't
mm,
try to be in the market all the time with that constant hammering of information. That data that's as you said, watching your P&L go up and down, yeah, crazy, which basically then results in higher emotions, higher stress, and dumber decisions.
mm.
And so, what about you, Mike? How do
Ah,
you avoid that
well,
emotional discipline? I mean, didn't you write a book about that?
Yeah, a few of them. So, of course, I still have losses. I mentioned the losses earlier, though, with Reddit and Bros and keeping them small. Part of it, I think, is setting proper expectations.
Mm,
When we had Andrew O'Connell on, and
right.
he at the time he was number one in the U.S. Investing Championship. I'm not sure where he's placed right now, but still, I'm sure having a phenomenal year. He's having a success rate of about 45% or so. That's right around where I'm at. You're a
Sure.
bit higher at about 65%, something like that. Right?
Yep.
So it's not about being right all the time.
Yeah.
It's about having bigger winners than your losses. It's
Yes.
about sizing correctly. It's
Right.
about knowing when to lock profits in. It's about knowing which trades to take. It's about having some sort of a process that helps you do all those things. And to me, stress comes if I've got a process and I deviate from it.
Yeah. Yeah.
So
That's
the
good.
more that I stay on process, the less stressed I am. Even if I have a loss, that's fine because that loss was part of the process. Because statistically speaking, if I'm going to lose half of my trades, then oh well, I did everything that I was supposed to do. This is just one of those outcomes, right? Same thing with a win. I'm not attributing the win to me being so great. It's me following the process. And the better that
Yeah.
I'm able to follow the process, that's what's leading me to where I want to go.
Yeah, no, I agree with that wholeheartedly. And you made a comment there. As long as I stay on the process, that's one of the things I think that people, when they watch the replay of this or the video of this later on, that or listening live right now, is that's one of the things that I think you can take away from what we're saying is basically if have a winning process, and that means have a process with an edge. Understand, like Mike said, is basically as long as you stay on process. That is such, get that
Yeah,
tattooed on your arm or something, before
yeah,
starting 2025, or at
yeah,
least put it on a sticky note
absolutely.
and put it on your monitor.
And can I throw in a little nugget there, a little Easter egg? So
Sure.
go for anybody. I would recommend that you go watch this interview. I just watched this interview yesterday between Jordan Peterson and Dallas Jenkins. Dallas Jenkins is the guy that he's the one that put together this great show called The Chosen.
Right.
Go
Right.
watch that because the same thing that he experienced in his journey of making movies and failing and then eventually coming up with The Chosen is the same thing that we have gone through right here in this conversation in regards of staying on process.
That's right. That's right. So one of the other things about that staying on process and the aspect of that emotional discipline, one of the other things is that helped me dramatically is understanding that I've honed down my what I'm looking for on the chart to what I consider and what are high probability opportunities. In other
Mm,
words, yeah, it's all the ingredients that are there where the prices should go in the direction I expect, and if they don't, I can cut the losses really quickly. But I know that these particular setups, the probability of them succeeding is greater than the probability of them failing. So that
mm,
helps in understanding. Uh, um, is that that you have to understand that there's a probability. Now, do I know the exact calculation of, well, this one is 75% probability of success? No, I don't. But all I have to know is it better than 50-50? Is it better than 50-50?
ah,
And if it is,
that's a great
uh,
insight, Dennis. I think that a lot of people, when they hear probabilities, like that, there's a lot of people that want to know, like, well, what's the actual stats? Like, is it 57.5? Is it
yeah,
69.372? right? Like,
Right.
and they're thinking that it's this kind of mathematical model, but to your point, like it doesn't have to be like that granular.
Oh, exactly, exactly. And I think that people can use that thinking that it needs to be that granular to do either one of two things. One is they go off chasing how to figure that out, which is waste, from my, if you want to know the probabilities of a particular pattern working out, get Tom Bukowski's book. I'll put a link in the description, on the YouTube channel, Tom Bukowski book, because he's gone back and he's reviewed, hundreds of different setups and patterns, and he knows the exact probability of them being successful or not successful. Um, and I used his work to basically come down to my 6 major candlestick reversal patterns that I use. Each
Mm-hmm.
one of them has a, better than 60+% chance of succeeding, right?
Mm-hmm.
And because the other thing, but as I said, and so they use that thinking, oh, they kind of have this Ivy Tower type of concept of, I'm a brilliant guy and I can figure out what the probabilities are, or the opposite end of the spectrum. Oh, learning how about the probabilities is too hard, and so it generates an excuse not to learn, or an excuse not to understand, which
Mm-hmm.
again it gets back to false and limiting beliefs about one's own capabilities. Wow, that was really good. That was heavy.
Mm-hmm. Chasing
So,
rabbits down rabbit holes from Alberto.
and so is well, hopefully we're not doing that today, Alberto. Anyway, all right. So, what about oh, the other thing that I was really guilty of is that aspect of I really prided myself in being a lone ranger out there. And by being a lone ranger, I'm still into some extent, because I do a lot of innovation on my trading for my trading. I do that by myself, but I also now get input from other people about, what I'm, planning, looking at doing. But there is a myth out there that trading is a solo journey, and so, isolation and the pain points is isolation results in slower growth without feedback and support. Now, I know that you have your Mara Wealth group, and I have my autopilot trading group. We both have Discord channels and this type of thing. Um, where's Tonto? Uh, um, the Okay, now you got me off gear, Alberto. No, that's really good. Where's Tonto?
Well, hey,
Anyway,
I tried the trading as a solo journey too for a very long time, and for a decade I went nowhere. And then I
yeah,
finally found a group. I found the IBD meetup group, and thankfully I found them at a time where I had began to study O'Neill, and so it was a natural segue into learning more and seeing what other people were doing, and we're all talking the same language. And then
right.
that's what helped me go from struggling person for years and years to wow, now I'm finally having some real progress and I'm starting to have a profitable year, and then
Yeah,
stringing multiple profitable years together. And it all started from having a community that you're able to talk
yeah,
trading about. So that way, it's not just stuff that's swimming up in your head. You're able to bounce an idea off of somebody, and they're able to say, "Oh, I'm thinking the same thing." No, you're. I think that you're nuts, right? It's good to have
yeah.
that kind of feedback, and from feedback from people that you could trust and make friends with.
I agree with that whole, but Mike, what changed in your belief structure to allow you to finally say, I need to interact with other people. I need to learn. I need to be brave enough to ask what I think is a dumb question.
Uh, I've had an entire life of asking dumb questions, so that part was never really a problem for me. Um, Yeah, well, what changed back then? Well, at first, my coworker had handed me O'Neill's book, and so to maybe part of it's serendipity, part of it's dumb luck, part of it might be divine intervention. But
Yeah.
the coworker that I'm sitting across hands me O'Neill's book. So this guy was a trader, a floor trader for many years, and then he left behind to come work at the time we're both working in healthcare. We're sitting across from one another, and so he starts to tell me some of his old war stories, and then I told him, like, I'm not really interested in trading anymore, and then he hands me O'Neill's book, and so I read O'Neill's book. I devour that one. He also handed me Martin Zweig's book too, and so those ones are making a lot of sense. Then he tells me about IBD, and so I start reading IBD, and that's where I saw the ad for, there's meetups in this city and that city and this city. And so New York City, there's got to be one, right? So that's where I found that. And because I was already buying into, I see how the system works and it makes sense. You're looking at, what sorts of things were common among the stocks that ran 500, 1,000%, and looking to see, history repeats itself. Where it may not repeat itself, but it does rhyme. So let's look for the same kind of things in the future. And I was starting to see how that works. Because I had bought into that, I was able to then go to the meetup, because it was just people getting together, not trying to sell you anything, but just studying together. That I could get behind as a student. So went to that, and I was very impressed. I thought that it was the same kind of caliber of presentation that what I was getting in grad school. I wasn't studying finance in grad school, but that level of detail into a presentation. And at that point, I was hooked, and I just kept on going back and learning and making friendships. And
and when I mentioned that aspect about getting past the point to, I guess it's basically when the level of pain gets so high, one either does one or two things. They quit, and then it makes the pain go away, or they persevere and push through and say, like if they're uncomfortable asking questions, or they have this perception that, I don't want to ask this question because you're going to, the other person's going to think it's dumb. But the fact of the matter is in reality, there are dumb questions, but not when a person's first getting started. Ask the question, get to the place where you can push through to ask the question. And then what's that?
No, there is I think that there's a big difference between a dumb question and a smart question. I think that it's the perspective. I think that it's the stance that the person's coming from. If you ask a question from like, I know, and you're coming almost like to try to argue something versus being open to what the answer might be.
Right on,
I see this happen all the time on X. When people ask a question, and God bless Mark, because Mark Minervini, he gets this all the time, and I'll see some of the comments that people ask, you're approaching somebody that's had 40 years of success, and you're trying to tell them better versus being open to what they have to say. Give me a freaking break here.
No, I get that. I understand it, because sometimes I do some work with helping some some like churches and other, what I call it, the slipped my mind, but in setting up some trades and all that kind of stuff, and doing some things just as not as advisory, but just kind of coaching and all that kind of stuff. And what's funny is that very very few times they should be asking the questions of, how are you getting this where we're getting a nice big return on this? They're not asking that question. They're asking, well, why aren't you buying a particular hot stock at a particular time when in reality, and I'll just say because it doesn't meet the criteria that I that's why I'm not buying it. And so anyway, the understand the regulations and taxes. We want to basically be able to still provide at the end here the little indicator that I utilize for finding bottoms. So, what about we won't spend much time on number 10, but uh, because a lot of times they think that taxes and rules are minor details of trading, but the fact of the matter is that taxes can be very complex and also compliance issues. So I suggest that you find a really good CPA or financial advisor to work with to basically be able to. And there's also some software out there for tracking trade activities, or use your own spreadsheet. And then how do you stay up on that aspect, understanding the regulation and the taxes, Mike? Do you hire that out, or do you try
Well,
to
yeah,
stay on top of
I
it
hire
yourself?
it out, but at the same time, too, I think that it's important if you're actively trading and you're trading in an account that's going to be taxed, that when you're pulling profits out, that you budget for the tax. Right? A lot
Right
of
on.
people don't do that. A lot of people just
Mhm.
keep on raking in the profits, and then they'll go and they'll either let that money continue to compound. And, oh, I'm just going to keep on recycling, working for you. Or if they pull out the profits, they'll go and use it for something. Part of it
Right.
has to be taken out and set aside for the tax man, because if you don't do it now, you're going to be doing it later on, and that's where all the stress comes in. So plan
Yeah.
ahead, just figure out what kind of budget you need to set to pull out and hold it aside, and then do that every time that you pull out profits.
I agree with that wholeheartedly. And then it takes a while to be able to learn about that kind of stuff. But nobody likes it when the tax man, that old adage, the tax man cometh, and he does. So uh, I carry a CPA, and the thing that's so cool anymore, it doesn't have to be a local CPA. You can find a CPA. Mine's like in Ohio, and she takes care of all of our stuff, business wise and trading wise, and so that's really awesome. So anyway, and she also stays up on the regulatory changes and all this type of thing. So, well, I want to share one thing with you before we jump over into that. That concludes the top 10, but you want to see what we're going to basically do here. And this is an indicator that I have been utilizing for many, many, many years. And it's called what it's called the percentage of stocks above the 20-day moving average. And I put a link down in I put a link and sent it out to everybody where you can go in there and grab this. What makes this a very uncanny type of indicator is when this indicator gets down below 30, which is right here,
Hmm.
that oftentimes leads to a tradable reversal, and sometimes even a tradable a longer term trade. And we're right now currently down below 30. And I also like to utilize this in coordinate it with TQQQ, the leverage
Okay.
three-time leverage ETF for uh, for the Nasdaq. And so, how does it work? I'm glad you asked.
Yeah. How does it work, Dennis?
How does it work? So, what I'm looking for is once I get, I make this part of my daily and/or weekly routine, and when prices get down below the 30 line, I start looking for bullish reversal signals on the charts. And
Okay.
I encourage you to go ahead and go, load this up. It's free on bar charts, and go back in time. Now this is what is this? This is a 1 year's worth. And go back in time just to see. Okay, here is it dropped below the on TQQ on this indicator. It dropped below the 30 and hit a bottom here around April 16th, April 17th of this year. Well, what did TQQ do at that time frame? And we'll go and look at that. When's another time? It dropped down here August 5th. You know what I did is I forgot to write down the, yeah, April 16th. And it actually was down here in earlier June time frame, but I'll go down to this low one here on August 5th. Let me jump over to the charts. So I want to go back to April 16th. So April 16th was, there we go. April 16th was right. There's April. Here's April 16th. And you'll notice 2 days later, we get a reversal candlestick here that goes on for a nice run up here to 85% now, or $85. So if one would have gotten in down here off of this reversal signal, there was a run, and that run was only 66%. Not bad, right? Now, what about the other one? August 5th. And right there is August 5th. Isn't that amazing? And it bounces and takes off and runs. How far did it run this time? And let's say you only picked up this part of the run, and there's a couple of different ways you could get in, either on a reversal signal. And I didn't get a really good candlestick reversal signal until I closed above the 8-day moving average here. And then it went on and powered on up from there, another 23%. And so for me, it is an uncanny type of indicator that is worth paying attention to, because dadgummit, again, I've used it for years, and I don't share this with everybody. No, what I do is, with my autopilot trading members, I share it with them. And Fernando Alberto says personally he uses the percentage of stocks below the 50 on the SPX. It probably can work in a similar way. But with this one, I find, like I said, uncanny, and experiment with it. Don't just take my word for it. Go check it out yourself. And this particular chart is available on multiple platforms. You can find it on stock charts, bar charts, and just take a look at it and go back
Yeah, I
in
just pulled it
time.
up on TradingView, and it looks the same. So
And go back in time to past years, and that's where we designed a lot of our processes around this. Recognize, especially for the leveraged ETFs, because the leverage ETFs, with the way they compound out on a yearly basis, typically 4 to 6 times per year, they're going to give you an opening to get in for a 15 to 25% run. When that's compounded out over 4 to 6 potential trades for the year, that compounds out at somewhere between 70 up to and over 100% from there. So that's my gift for the New Year's to everybody who's out there listening. So,
yeah,
Mike,
okay,
have you
good.
ever used that?
No. I can't say that I have, but I've just put an alert over on TradingView for every time that this thing crosses 30 to send a little ping, and
There you go.
now I'll be aware of it.
Hey, what's the ticker of it for it over on TradeView?
Same thing, MMTW.
Okay, cool. Excellent. And again, there's a lot of other, and this is for the NYSE. You can also set it up to look at it for the NASDAQ or the S&P with similar type results. And so that's it. We've covered the 10 expanded essential trading secrets. Mike and I, I'm working on a PDF that we're going to be able to send out to anybody who wants a copy of the PDF that cover these 10 trading secrets. So now it's your turn. Drop a comment below to share the biggest limiting belief or trading myth you'd like us to debunk in 2025. And if you can't put it in the comments here, put it in the comments over on Spotify and or our YouTube channels. So again, thanks for being part of our journey in 2024. We're looking forward to having some great guests. Who's some of the guests we're going to have in 2025, Mike? I know we got Kathy Donnelly is going to be on board.
Yeah, Kathy, Jason Shapiro is going to be on board. And a lot of other people, a lot of people are coming on in 2025. Can't believe that it's almost here. It's just 2 days away.
I know. And so anyway, okay, guys, that's what we've got today. So I'm going to say, because Mike's got to go to a party. I mean, what about that?
Yeah, well, we're having a big party here. 25 people coming over in about less than an hour.
So we'll just say aloha. God bless everybody. Stay safe for the rest of 2024 into 2025. And we look forward to just blowing as Alberto said, he's looking to basically really rip it going into the next year. So aloha. God bless. Thanks, Mike.
Bye, Dennis. Take care. Bye, everybody.
Oh, there we go.